Welcome back to my final morning report chart appraisal on Friday the 3rd of July with me, Rich Pro Market Analyst at Tech Markets. That's gold, and this gold chart has completed two daily closes underneath the 1170 support band, which is certainly bearish, and also pushed intraday below that support at 1162 to hit a low of 1156.85. Now, the problem I've got with this chart is that it continues to sort of lack any real conviction in this sort of selling drift. It is drifting lower. It is constantly pushing lower on the intraday basis, also on the closing basis. But it still seems to have a lack of conviction. You've still got the RSI that's sort of not really suggesting a major breakdown, any major weakness. RSI is still holding above 40. And also we get these sort of tendencies of the bearish moves, and then suddenly you'll get a bit of a bull correction within the bear move. So it just makes it rather difficult to trade it on a long basis, because I say on a long basis, on a longer sort of time frame basis, basically, because even this is the example here. We've got this downtrend that played out, that you got the sell off, and then you had a big bearish, so a big bull reversal, which is a bullish engulfing 1 hour key 1 hour reversal on the payrolls report yesterday, and since then it's been sort of drifting higher again. And that sort of now leads to the question, is this going to continue higher, because it's now testing that resistance around 1170, which had been, as I said previously, the sort of band support, and that's coming under pressure now. So if you start to see it trading consistently above 1170, then obviously that would be consistent with a bit of a continued recovery. The next resistance above that is 1175, which is sort of a bit of an old sort of pivot level, providing resistance back on the 1st of July, Wednesday, and then up towards 1180. That is again a resistance level. So the resistance coming in sort of $5 increments on the gold price. But as I said, it's just difficult. I mean, maybe this is going to give you a nice little rally that you should be selling into. But at the moment, obviously, there is a slight turnaround. So just just be careful with your short positions, I would say, on this move, because you could see a continued move. You haven't got any US trading today, which isn't going to help you, because you need to see how the trend is developing following on from that payrolls data. That payrolls data, which was dollar negative being gold positive. So that's why we've seen a sort of rally coming through from that payrolls report. However, we need to see how the market is trading through US side to see how the market is accepting this new sort of outlook on the Fed policy, potentially following on from that payrolls report. So that is going to be a big sort of determinant factor, I think, in the near-term outlook. Technically speaking, you need to be breaking above 1170 and then pushing on towards 1175. At the moment, you do actually have an improving outlook, because you've got this RSI. If I actually get rid of that line there, you've got this RSI which is pushing above all the levels that it's seen through this week, which is pushing into a more positive configuration. If you see it moving into the 60s, perhaps even 70, that would suggest that there is a turnaround at play. You're seeing the MACD lines pushing back towards neutral. If you see that moving above neutral, stochastics moving above 80, things like this on the hourly chart, that would all give you an indication that the outlook is turning more positive very near term. And as I said, it will be interesting to see if this once again gives us another chance to sell. Chances are it probably will do, but at the moment it's playing out as a small rebound rally. So just bear that in mind with your short positions. So I wish you good luck in your trading, and I'll speak to you again on Monday.